Alex Wilhelm, who's joining us, the editor-in-chief at Crunchbase News. Alex, so Beyond is getting a little bit hit this morning, down about 12%. But of course, this earnings, I think, is going to be exciting. I mean, the last one, it cruised right through despite a little volatility.
Yeah, I'm really curious how expectations can meet reality in this case. You know, before we spoke this morning, I did a little bit of prep. And Beyond, before today's reductions in price, was trading at about 122 times its trailing sales. So I think today we have to see kind of a double beat to keep that going. I think it needs to beat on this last quarter's expectations and also have a very strong bit of guidance. But I'm just unsure of how a company can do that given the pressure the market has on it. Expectations are wild, Oliver, and I'm reticent to say that that's going to work out. Of course, I don't own the stock myself, but just looking at the numbers to prep this morning, kind of a scary situation.
You know, I've been having trouble keeping track of kind of why. I mean, my job is to kind of try and follow the narrative, and I'm having trouble with this one, where what's the catalyst for each of these big moves? It just seems like it's become this huge kind of momentum rush. I know it's based on something real, but how do we figure out, how real, not to be too punny here, but how real is the addressable market for them? Like, how do we price how big they can get?
Yeah, every time I try to answer that question with a friend of mine when we talk about the markets, I'm told something else. They say, the grocery store near my house started to stock it and sold out in one day. Or they bring up a new partnership, or they bring up a new planned partnership. I have friends that don't buy individual stocks that are buying this stock just because they either believe in its mission or believe that it's found the right moment in the market to grow at this segment. So we can wait and see the numbers, but to me, I'm in a very similar boat as you. I think it's a cool product with a cool market space and fast growth, but to see it priced at 122 times trailing sales means that the market has either lost its mind or we're about to see one of the fastest growing companies of all time.
Right.
And I don't quite see that, but again, I'm a bit of a contrarian and conservative, as you know. But this is going to be one of the most interesting and fascinating earnings reports I think we're going to see in the entire quarter, and to see it this soon is really a lot of fun.
60% sales, I think, is what the street is roughly pinning it at, about 360 million, which would be for 2020. That's the target. That would be about 60% from what they're expected to do this year. So that's kind of looking forward. But to your point at the valuation, I mean, there's cloud stocks that have visible recurring revenue at rates of roughly around the same as well. So Alex, is there a number that they can put out? Is there a commentary they can put out to kind of keep this gravy train rolling?
Well, I think the software stock, the SaaS stock comparison is very, very good. A lot of SaaS companies can grow at 60% a year, but they're not given anything like a similar multiple to what Beyond Meat is getting from the market today. And I think those SaaS companies have stronger margins. So they have better revenue quality because it's recurring. They have stronger revenue gross margins, and they're trading at a smaller multiple. That means that individual investors must be pricing in more growth than the analysts that you and I are looking at. And the gap is just that. Can the company beat the analysts and meet the kind of general market expectation? I mean, maybe. Maybe these partnerships have generated enough revenue in the short term to do that. But this is a company that raised over 100 million in venture capital during its early days and has done very, very well. I'm just concerned it's going to get whacked because some people had too much in the expectation category and not kind of enough in the results category.
They had a move one day where they announced like a new Beyond Bacon, I think it was, and I kind of joked that, why is anybody surprised by this? They can do anything at Beyond. They could make a book. Doesn't mean I can read it. It's shaped like, veggie meat. But, the idea here is they could keep coming up with stuff, but what really matters? I mean, isn't there a potential to where somebody can come in and do something similar if they're as good? I know that you've got Impossible Burgers and stuff like that. Is part of this the fact that they're really the only vegan company that trades?
I think that's a lot of it. If you want to put money into a company in this sector and you're not a accredited investor who can cut checks to private companies, this is your one bet. I have a friend who owns 2 shares because he likes the stock and he's a vegetarian/vegan. And so he's made this bet because he thinks it's kind of a fun way to play the market and also enjoy himself. I wonder how many other traders out there are like him that are buying this stock because they like the company or like the direction it's going. That does not mean that the stuff you and I tend to talk about fundamentals, earnings, multiples, and so forth are going to line up with expectations. It's a put up or shut up moment for the believers in this company. But I think, as you and I have seen this morning with its falling stock price, there are some other detractors out there like us who are shaking their heads a little bit, and I don't think that they're going to be wrong. But again, we'll see very soon.
All right, let's talk next up after that. I think the other big one, of course, is going to be Uber, company that it feels like just from the trading action, nobody really wants to sell it. Nobody really wants to bet the house on it either because it's such a game changer in lifestyle. What are you looking at from the fundamental side next week, right?
A couple of different things. I want to see how fast they can accelerate gross bookings on a year-over-year basis, and I want to see how that converts down to revenue growth. Now, if they can do well on the gross booking side, which is just how much money is spent on the Uber platform through Uber Eats and Uber ride-hailing and all of that, and it can convert well into revenue, we have probably a pretty good quarter. The next question becomes, how does that impact free cash flow, and how does it impact net income? Uber had negative operating cash flow of like $770 million last quarter, and it lost about $1 billion. The company needs to show that it can grow, i.e. gross bookings and revenue, while reducing its losses on cash on a net basis. And that's going to be really, really tough. Everyone knows you can grow revenue if you spend more. Uber has to find a way to grow while reducing its losses, and that's been the puzzle it hasn't cracked in the last 18 months. I mean, Oliver, when's the last time you saw Uber's losses and went, that's getting better?
How does the number of users on the platform really affect the business? I know that they, last time around, talked about this a good bit because they say, well, you've got Uber Eats, and we are going to continue basically possibly to make new services. Should we consider Uber's membership community, now that they've got rewards programs and stuff, as being analogous to like an Amazon Prime count?
I wouldn't quite put it in the same category as Amazon Prime because I don't pay Uber to get Uber benefits. I think I'm an Uber Platinum member, which is just evidence of how little I cook in San Francisco when I'm there. But I think that shows a good way to drive user loyalty. And if Uber can increase user loyalty and therefore revenue per user per year, things might overall turn around for the company. That will limit customer churn and drive up ride volume on a gross bookings basis and therefore generate more revenue. But that's a bit down the road. I don't think that program is right now going to be a driver. I think currently Uber Eats is the chief driver of the company in terms of gross bookings and revenue, but it generates less revenue per dollar of gross bookings than other Uber services. So what we could see actually is a disassociation of gross bookings growth with revenue growth. And if that happens, Uber has a different challenge to kind of work through. I don't know how much more money they can kind of squeeze out of Uber Eats for themselves because they're paying a restaurant and they're paying a driver. So, with this stock, we have slimming growth and stagnant high losses, and it's tough. But I think you started off very, very well. No one knows what it's worth. Yeah. And I think that's why it's trading so close to its IPO price. It's hard to get a sentiment going because no matter what you say, there's a good argument against it. So there's probably money to be made if you have a strong stomach. But in the meantime, I'm just going to watch and honestly, I'm just curious.
Yeah. All right. Hey, last one real quick, Alex.
Sure.
Slack, ticker work. I've been kind of surprised by its softness in a market that seemed to have endless appetite for workplace enhancing, products. What do you think?
Well, I was in a similar vein this morning prepping for this, but I did a little bit of math that might change our mind. So if you look at the company's Q1 revenue and extrapolate that out to kind of a full year number, call it its annual recurring revenue, or ARR as we call it in the software space. Slack is currently valued at 32 times its ARR. And to put that in perspective, the average SaaS company today on the public markets is worth about 11 times its recurring revenue. That means that Slack is being given a huge valuation premium compared to some of its peers. Now, it may be worth it. I'm not trying to say that it's mispriced, but I do think it is well priced by the market. There is optimism there, and it is being rewarded for what it is. I'm not sure how much of that is brand versus how much of that's fundamentals, but certainly Slack has found a good place in the market after its kind of controversial direct listing and is up from that price and is doing, I would say well.
Yeah. All right. Well said. Math is good. That's pretty interesting comparison. Alex Wilhelm, really good stuff as always. Appreciate you joining us, Alex.
Thank you, sir.
You got it. Mr. Wilhelm is the editor-in-chief at Crunchbase News.